Shifting gears, the U.S. Federal Reserve on Wednesday decided to cut its benchmark lending rates by 50 basis points to the 4.75% to 5% range. The latest decision marks the first rate cut in over 4 years since the onset of the COVID-19 pandemic. Our Seung-jae has more.
The U.S. Federal Reserve on Wednesday announced that it's cutting its benchmark interest rates by 50 basis points, bringing down rates to the 4.75 to 5% range.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
The jumbo rate cut was the first cut in 4.5 years since the onset of the COVID-19 pandemic. A statement released by the U.S. Central Bank cited recent indicators that suggest economic activity is continuing to expand at a robust pace, adding that while job gains have slowed and the unemployment rate has risen, the figure is still relatively low. Fed Chairman Jerome Powell also noted several economic indicators for the latest decision.
Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased.
Powell added that the FOMC remains focused on achieving its dual mandate goals of maximum employment and stable prices for the benefit of the American people. Meanwhile, the U.S. Fed also lowered its year-end target rate median from 5.1% to 4.4%, according to the dot plot released on Wednesday, signaling another 50 basis point cut within the year. It added that the median benchmark lending rates are expected to drop to 3.4% at the end of 2025 and 2.9% by the end of 2026. However, Powell suggested a more careful approach for the rest of the year, saying that there is nothing in the economic outlook summary that suggests the Federal Reserve is in a hurry. Seung-jae, Arirang News.